Welcome to Dirt Secrets, where we dig deep into the stories, strategy, and surprises of building and buying in Central Florida's hottest neighborhoods.
We're Kim and Amanda from Builders Concierge Group, your insiders in the builder world.
From helping builders create custom urban infill projects, even when that means knocking down an old home, to guiding buyers and relocation clients through every step.
We know the dirt, the deals, and the details that turn big dreams into beautiful addresses.
So grab your hard hat
And your coffee.
Let's dig in.
Hi, welcome to another episode of Dirt Secrets. I'm Amanda Wood, and today we are going to be talking all things mortgage and lending. So we have a lending partner here with us that, amazing, Jason Rutland with Premier Home Funding. Met him through another buyer's agent, and solved a tremendous issue that we were having to get it done. It was.
Yeah.
And when I learned what he did and how he did it and the difference in the cost that he was able to do it at, I was like, okay, I need to know more. So he came in, he met with our team. He also gave us some more creative products I had never heard of before. So I thought, you know what? Let's talk. Let's share some of the things that you have and you do. Not any lender can be everything to everybody. Neither can any realtor or builder. So you got to know your lane. You got to know what you're best at. And you need to know that too. So it's about your individual situation. And Jason's really good at going, that's not mine, but I do know somebody who's really good at it. Mm-hmm. So you want to pay attention. You want to consult with him. And if he's got the right fit, trust me, he just closed my own personal loan. That's how great he is. So really, I work with a lot of lenders every day because I'm mostly on the sales side. So the buyer gets to pick them and, oh yeah, it's good to have a partnership. Yes. One of the things I also say to my buyers when we work with those buyers on our past clients, we will do some buy stuff. When we work with them and like, go outside my ecosystem, I cannot help you. Stay inside my ecosystem and I can help you. So we have a relationship. Mm-hmm. If I call you because we do a lot of business together, you're going to do everything you can to answer the call and fix the problem.
Absolutely.
But if I'm calling you because I'm on the sales side and I'm asking questions and you don't have any idea, I'm going to be put on the back burner because you're going to have relationships. It's just how relationships work. That's why you come to us and ask us for a handyman. You ask us for anything that we may need. So I want to start this conversation off by being very clear that that's extremely important. Any realtor you're working with has an ecosystem. That's the reason that they say, please use my partner. But with that said, we're going to talk a little bit more to Jason and let him talk and tell you about his stuff. So Jason, tell me a little bit about Premier Home Funding and your role with the company that you own.
Yeah, thank you. Premier Home Funding's been around 22 years actually this month. So yeah, quite a long time. So we started out with a vision to help business owners who are growing their businesses to be able to buy homes. That's often a part of the market that is very difficult to serve. Exactly. And it had been a niche of mine early in my career. So it's kind of how we grew and just kept going.
And a lot of lenders don't like it.
No.
DCSR or fake statement loans, they want to run from them because they don't understand it. Again, you stay in your lane.
It's just a little bit of a complicated way to solve a problem. But once you've done it 100 times, it's pretty easy.
Yeah. Yes, you made it very easy. Thank you.
Yeah, thank you. Absolutely. So we have fun. We love serving our business owners. So,
absolutely. Yeah. Tell me a little bit about who is your perfect buyer? Who is the perfect, what do they do to make your life easier and get things done and to close earlier, which most people want?
Yeah, great question. So typically our perfect buyers are referred by their CPA.
Oh,
yeah. So some of our best referral partners of the years have been our CPAs because we do work with mostly business owners.
Right.
And business owners really have to plan ahead when they want to buy a house because they get hit with lots and lots of taxes, and they often are using every strategy imaginable to avoid those taxes. Well, that's great, except when you want to buy a house.
That's right.
So when you want to buy a house, that's when you need to show probably a little more income. But we get involved sometimes a year out because they want to know, am I showing enough or do I need to show more? And, a lot of cases, they're already showing enough, but they don't want to have to show more if they don't need to and pay out the extra taxes. So we get involved out pretty early. But, our ideal client, I would say, is this business owner who's been open for 3 to 7 years, has made the money that they had always hoped to. And now their family is trying to move up to their dream home. So, yeah, that's our ideal client. They often at this point have invested most of their money in their business. So they can't put a large down payment. So, we get involved early and help them with the credit and the down payment and plan it out.
Yeah, you've actually helped some of our clients credit and different things.
Yeah.
They have the money. They just miss things sometimes when they're running a business. They're like, they forget to do certain things.
Business owners get
Okay.
distracted.
Yeah.
They have a million things to
Yeah.
do. So sometimes credit is the issue, despite the fact they have all
Plenty
the
of
money.
Yeah.
We've seen some crazy credit scores from business owners that have millions in the bank, still can't pay the bills on time.
Yeah.
Yeah.
It's definitely a scenario. Getting all their information to you when you ask for it within 24 hours is probably critical as well to getting things done on time.
Yeah.
I see that happen a lot with our buyers. It's like, we're still waiting. And I'm like, you can't do your job until you have that information.
It's funny. A typical contract is 30 days.
Yeah.
I tell people we control about 4 of them.
Yeah.
So we're waiting on other people for all the others.
Yeah.
But the sooner our client can get us everything, we might gain another day or 2, because some clients take 3 days. It's like, well, there goes most of our time.
Yeah. And then the back end, like you've got other people you're waiting on with the processing and all that kind of stuff. So underwriting, it's constant. And I never thought about it that way. 4 days is all you can control,
really, because
getting it to all those
appraisal,
places.
title, it's really only about 4 days that we control. It's extra. Wow. It's funny.
So you're just kind of putting all the pieces together and marrying everybody up to
Correct.
make this happen.
Correct. Yeah. So my background was underwriting.
Okay.
While I wasn't ever an underwriter, I got trained in this industry by an underwriter.
Oh, wow.
And I would come in every morning and we would study for an hour every single day for 6 months.
Wow.
Yeah. Kind of an interesting way to get in.
Yeah. But now you're underwriting your files before they ever go to underwriting.
Exactly.
That's how you're getting things done fast.
That's how when we say yes up front, we know it'll close. Yeah.
That's what I mean by ecosystem. So you're a preferred with our preferred builders as well. They really like working with you as well, and that's a big piece. Yeah. If you say it's going to happen, it's going to happen.
Correct.
Even if you need an extra day or 2 because the buyer didn't do something, or the underwriter didn't do something,
or appraisal
got sick, or appraisal,
yeah,
or they need a appraisal review kind of thing. That happens a lot to us with new construction because of the cost of the home prior to what it is now.
That does happen.
It does happen sometimes. We can see it a good bit. We're seeing it right now on one of them, right? Yeah. That we're doing together. So we understand you're a perfect buyer. What are some cool new products? I know you mentioned you have a new one out.
Yeah. So we're actually teaching a new debt elimination strategy that we're partnering with Buying Your Home. Oh. And this strategy is something that I've been working on for a number of years. And through lots of blessing, it's come about. But it is actually the fastest strategy to pay off a home than anything else that exists in the market, but also the safest.
You haven't told me about this.
I know.
I just bought it.
I know. I'm literally about to record my own video on this tomorrow.
Nice. You get to hear it here first.
Yes. So it is coming out. We will be putting this out in a major way very soon.
That's brilliant.
I do expect it to hit the market and make a major difference in many lives across the U.S.
Well, you're putting people in debt. Now you're helping them get out.
That is our joke. People ask, what do we do for a living? We say, I put people in debt for 30 years. So that's what I do. Yeah.
It is one of usually the most expensive purchase in anyone's life is their home and then their next home.
Yeah.
It's also an investment vehicle. Mm-hmm. And the faster you pay it off, the less interest. Because when you look at, when you close on your loan, you look at the amortization schedule of everything. You're like, whoa, that's all interest. I didn't get an interest only loan. Yeah. You don't really start hitting it till like halfway through. You're like, okay, now I can start to see a dent in the mortgage.
I'll share one quick tip.
Yes.
This is something that I've really only realized recently, but a lot of people loved to keep their amortization schedules and like check it off as they go. I think that sounds torturous to me personally, but
oh God, no.
It's 360 payments. So, but here's the quick tip. If you look at that amortization schedule and it says the first payment, you're only paying $126.72 towards principal. If you were to throw an extra $1,000 towards your principal, you could eliminate multiple months just by doing that in the very beginning. Right. You add up all those principal payments. So if someone threw $20,000, they might take out the first 4 years, depending on the size of the mortgage. So the earlier you do it, it makes a major difference.
Yeah, I've got mine set up where I pay over.
Good.
I just let it automate itself, but I'm going to be paying attention to the next
We will get it out
stage.
very
It
soon.
sounds like it's going to be something different than what we're used to hearing.
Yes.
That's exciting.
It's fun.
Did you tell me, we just talked in a previous episode about construction perm loans. Do you do those?
We don't do those well, so we don't do those.
Yeah. Who's your referral partners for that?
We refer a couple of banks here in town.
Mhm.
Some of the banks here in town do a better job. We find that if you capture that entire program in-house,
Mhm.
you're going to do a better job. When you have to broker it out, find another solution, you lose control.
Yeah.
And the construction perm is all about control because you are planning to build something that you don't know the entire cost of. So once you plan it, it gets more expensive. And then the lender may say that isn't going to work, or the appraiser may say it's not going to be worth it. And there's this giving, take on it. So
I do them a lot.
I don't.
So I do understand it.
Yeah.
It is definitely, and that's what I mean by we can't be everything to everybody.
No.
So you've got referral partners for that.
We do.
We have referral partners for that. Physician loans, we see a ton of.
We've just started doing that one.
You mentioned that one to me. So tell me about your program because they're all different.
They are. If you're a doctor and, congrats, you have finally earned your way to making the income you always hoped you would make for your hard work. But you also have a lot of student loans.
And a lot of advantages to the physician loan because of that.
Correct. So the physician loan will absolutely eliminate from the qualification side those student loan payments.
Okay.
And that is probably the biggest advantage. The other big advantage is very small down payment to no down payment.
Oh, wow.
Yeah. So having the ability to, be a high income earner with no down payment, because you have been kind of working very hard for a number of years through residency or whatever, and not making enough with a mass amount of debt, that creates a huge obstacle for someone to be able to qualify. So the physician loan allows you with no money down, huge student loan to still qualify. Yeah.
And 100% financing, no mortgage insurance.
No mortgage insurance.
What are your limits? Because I have had one buyer that had 100% up to $2.5 million with one bank.
Yeah.
And I know that runs out it runs its course.
It does.
Everybody has their different things. And I have others that are only up to $1 million or $1.5 million. What does your program look like?
I believe ours is 1.25 to 1.5, somewhere in there is kind of the window.
100%.
Yeah.
Okay.
100%. Yeah.
Very cool. So, it just depends on what kind of house you find. But I've had somebody who's like, they wanted a house and they were qualified up to $1.5 million.
Yeah.
And we had to find a lender that could do it over that because they had sold their house with all their furniture, everything.
Oh, really?
It was like, my cash is going to pay to they've got this brand new, gorgeous, $1.7 million home. They want to put nice furniture in it.
Of course they do.
And you don't want to buy anything cheap or have something ugly in the house. So you're buying it very specific, but that takes money. Furniture. Ooh.
Yeah.
I mean, boy, do they make a lot of money.
They do. And,
like eyeglasses.
We've had some, start in the mid to low twos all the way up to doctors that are making over $1 million starting out. So
you had another unique program. I don't know if you still do that. You mentioned to our team, if they're making a lot of money and they have a certain amount of money in an account, it's interest only or interest free. So tell me what that looks like.
So there's actually two different ways to structure this.
Okay.
And most loan officers don't know this. So if there's anyone watching, you can learn some cool tricks here. If you have assets, we actually have a program that allows you to divide those assets by 60.
Okay.
And then we use that number as your monthly income. So if someone had 600,000, we divide that by 60. We now use 10,000 as a monthly income. They don't even have to take income. We just say that's the equation. So that comes in really handy when you have maybe someone getting out of a divorce and has a settlement or a lawsuit and a settlement. Sometimes when people are nearing retirement, they have money saved up, but their income is starting to dwindle or they've already retired. So there are some ways to do that. The other trick that's really cool, and I think we use this on an early loan with you, was you had a client who had a lot of assets, right? And zero income. So we just developed one payment out of those assets and made it like $13,000, $14,000. And right away we get to declare that's the income. So little nuances like that really solve the difficult problems that people get stuck on.
Well, I met you initially because of a bridge loan. And you solved a problem with Beth Ann Bear's client.
Yes.
They had a house to sell and she's like, no, that doesn't work. And it doesn't work often. And it is how I bought my house, but it doesn't always work. Very specific home, they needed to move and, take out a lot of that personality from it for others. So you had a phenomenal bridge loan. Normally these loans are what, 20, 30, 40 grand?
Oh yeah, they're expensive.
They're very expensive. And you had one, tell me about, because they don't fit for everybody.
No, they don't.
That too.
So it's funny. For the first 20 plus years of my career, I was the anti-bridge loan guy. Couldn't stand them. Never were one. Told everyone how they were so terrible. And then in 22, we finally came across a product. I was like, whoa, this is different. So love our bridge loan product. It is closer to like 2,000 to 3,000 closing costs instead of the 10 to 20 they can be. We've seen one up to 28,000 once before someone was offered. And interest rates are very, nominal considering, barely above where interest rates are now. And then at the same time, immense flexibility. You can pay off debts to qualify. You can use some of the money for down payment on this house or to fix up your old house, fix up the new house. You can do a lot. It's extremely flexible.
Yeah, you saved multiple clients of mine.
Yeah.
That nobody else could do it. I'm like, go back to your lender, find a way to do this because you have a house to sell, but you have a ton of equity, that kind of thing. They can't do it.
Yeah.
So what are they going to do? Lose the house that they want? No, we're going to find
a solution.
And then that's why you also have people that you refer to when you can't do things.
Right.
And every lender needs to have that, by the way. Please, if you can't do it, help them solve the problem. Be there, be an advocate for your buyer. So all things lending and all things equal, you have another program where they can purchase like a investment home. And as long as that money sits in a bank account and every night it looks at that money, if that money is above what the cost of that house is, are they paying 0% interest? Is that how I understood that program? Or do you still have it?
You know my programs pretty well, don't you? You know them better than I do, maybe. So it's actually not an investment home, though. You can do it on an investment home. You can do it on a second home or even your primary residence.
Oh, wow.
But the program is this. If you have, let's say, an $800,000 loan, we tie it to your checking account. And if your checking account has a $100,000 balance that day, we only charge you interest on the $700,000. If that day you should have another $300,000 get deposited, these are some big numbers, but I'm doing it for the exercise. Now we're only charging you on interest for the $400,000, but you're still borrowing $800,000 from us,
right?
But we're only charging interest on that difference. And we've had clients that have had $1 million loans and $1 million in checking. They're getting charged zero.
And it's got to be a checking account, not a savings account.
It has to be a checking account.
Okay. Business checking or personal?
It's a checking account that we establish for you.
Oh, okay.
So it's a checking account.
Oh, so you've got access.
Yeah.
That makes sense.
So it's called a sweep. And every night we sweep it over. So it lowers your balance for the one night. So that's why we charge you only for the difference. And then we sweep it right back at 12:01 a.m.
Wow.
So it helps you with the calculation to really save a lot of interest.
Yeah,
So
to me, that works great for investment. I mean, come on.
It does.
I mean, that changes your ROI when you're looking at investment homes big time.
And you have clients that have 7% interest rates that are getting charged 0% because of this. So you're borrowing the money and paying no interest.
Well, my bank account's hungry right now. I just bought a house, so we'll work on that one later.
But the furniture looks good, I'm sure.
It does. All right. So last thing I want to really hone in on, because there's a lot of debate about this. And I think it goes back and forth, but I'm not even I've been told this more than I understand this.
I don't even know where we're going. This is interesting.
Yeah. You don't know where we're going?
No.
See, I'm going to catch you.
Okay.
What is the difference between a bank, FDIC insured backed bank, and a mortgage lender? Explain some of the differences and what the advantages and disadvantages.
Sure.
Because sometimes it's better for one, and it's, there is a give and take there. Yeah. There is reasons for different things.
Yeah. I think the best way to illustrate this is a client of mine I have in Gainesville. And for years, as he was growing his business, he had his business banker as his personal banker. And it helped him to grow his business. But there came a point where when he was doing it, the business banker and their local mortgage lender there could only approve him for like an $800,000 loan. And he needed $600,000 to go to closing. He got referred to us, funny enough, by a CPA. And after meeting with us, he needed, I think it was like $48,000 for closing instead of $600,000. And he was ecstatic. Our interest rate was lower, but our loan amount was astronomically higher, which is what he wanted because he wanted to keep his money in his business. Yeah. And he was thrilled. We're actually helping him refinance now. So
there's reasons to go to, what would be a reason to go to a banker initially?
To go to a banker initially, I think when you're growing a business, you got to be in front of a banker. You have to have a really good relationship with.
For personal home purchases.
For personal home loan?
Yeah. for sure. But
I got to find a reason, don't I? Sorry. No, there are some, I would say your down payment assistance scenarios, they're very beneficial.
Mm-hmm.
They do have to help in the community, and they really have some phenomenal programs to help. There are a couple of instances where they might make sense, but it's program specific to that individual bank. So I can't comment on their programs.
Right.
But they have usually one or two programs that fit some people really well.
If you fit perfectly in the box.
It's amazing.
Yeah, it works, right?
It does.
But when you don't, like me as a business owner and putting most of my money back in the company and building and growing, it just changes everything with your taxes and be able to be traditional with your lending.
If I could, I should stand outside a bank because there's a number of people that get denied by banks that are very qualified. But banks, what they do well, but the box is this small.
That's correct.
Right?
That's correct.
Where we do all of this. And a lot of what we do is at a much better deal than what they would offer at the bank.
Absolutely.
So,
and we do refer to both for different reasons. I mean, that is the type of thing that we pay attention to. So this has been awesome.
Thank you.
I would like you to tell anybody who might be listening where to find your video.
Sure.
And because you're about to put out about getting out of debt.
Yeah.
Once you get them in.
Yeah. We are still naming the channel and everything. I can tell you it's probably going to be something like Uncommon Real Estate, but it's going to have a lot of insane, awesome finance strategies of how you can eliminate debt and also build wealth. So
I absolutely love it. And when to refi, when the rates come down, you're going to let me know that too, right?
Absolutely. We'll let everyone know. We need that to happen soon.
It's about to come. It's happening.
Is very close.
I'm already talking to people that are doing it right now. So it's happening. Well, I hope you've learned a lot about lending and understanding that there are a lot of different programs that fit a lot of different people. And it's knowing the right people, trusting your realtor and who is your consultant and advisor on these things to point you in the direction and stay in the ecosystem so that it's a lot less stress when we can get things done and communicate.
Correct.
And I talk about every episode, communicate and listen. There you go. Let's do it.
Yeah.
Well, this has been another episode of Dirt Secrets. Thank you for joining us. And until next time, I'm Amanda. Have a great day.
That's another episode of Dirt Secrets, where we uncover the real stories and strategies behind building and buying in Central Florida.
If you're a builder ready to make your mark with a custom urban infill project, a buyer looking for the perfect home, or someone relocating here for a fresh start, we're here to guide you from blueprint to closing.
Make sure to follow the show on your favorite podcast app so you'd never miss a single secret and to stay ahead of the market.
You can find us at buildersconciergegroup.com or on Instagram and Facebook at Builders Concierge Group, where we share listings, behind-the-scene tours, and sneak peeks of what's coming next.
We'd love to hear from you. Send your questions, your dream home wish list, or your own dirt secret, and we might feature it in a future episode.
Remember, whether you're breaking ground, buying your first home, or finding your Florida forever home,
the right property isn't just built, it's crafted with the right team, the right strategy, and the right connections.
You've been listening to Dirt Secrets, and we'll see you on the next episode.